If so, why? Does this represent a significant change to a client's income versus growth strategy, and should asset allocation be revisited? Come on, Cole. Consider the amount of interest income compared to dividend income and how this represents the underlying portfolio. Consider the tax efficiency of the investments and review asset location. Given the net investment income surtax, should the client move investments that create taxable income into tax deferred accounts and vice versa, while still maintaining an appropriate allocation? Review investments funds for fee structure. For investments in taxable accounts, are tax managed funds investments available? Has the client established an account for emergency funds? If so, where and how much? Assist client in revisiting liquidity needs, including reviewing cash flow analysis. Given the higher rates available in some online banks, consider using a high yield savings bank to hold the cash reserve. And then explain tax preferred treatment of right dividends. Man, I just gave a mouthful, right? Just that page 5. That's a very important page. Page 5. I'm going to make a note there. Page 5. Okay. I'm going to spin through these. Self-employment income. Those are Schedule C's, right? Determine what type of activity the business is and discuss hobby, investment, activity, trade, or business rules, including loss deductibility or limitation based on character. Determine whether the business generates qualified business income, QBI, as defined under IRC Section 199A, to be able to potentially take advantage of the 20% pass-through business deduction. Consider the current income phase-out limitations. Are there changes in the business structure that could allow the client to receive a larger deduction? Now, I'm going to stop right here. For all our business owners, I'm going to ask you a very important question. Do you have an accounting software? No, let me ask you another question. How do you manage your books? Wait, hold on. How do you record transactions? Wait, do you have an accounting policy manual in place? Wait. When's the last time you ran a financial statement, looked at your income statement, balance sheet, and cash flow? Or got and went through advisory and planning with your financial professional for your financial statement? Because this section here, we're talking about, self-employment income, Schedule C's, S corporations, how you managing your books. Because if not, then you're taking a reactive approach. I made this, I spent that. I don't remember what this receipt goes to, but can you tell me how to take advantage of of saving some money on paying taxes? Yeah. Should I continue? Okay. On self-employment income, I'm going to stop right here. I'm going to leave it right there. We had that second paragraph. That's another important piece. We're going to stop right there. Let me take a look real quick. Do I want to stop there? I'll drop down to the last one. Now, I'm going to read these. Review groupings of activities under Internal Revenue Code, Section 469, to determine if elections should be made that will benefit the client. Also see Schedule E. So we got schedules, we got forms. There's a whole lot going on there, right? Consider the use of retirement plans for self-employed individual. How many self-employed have retirement plans if that's your only income as a self-employed person? Schedule C. Determine the income shifting opportunities among family members via employment. What does that mean? schedule a call. Discuss the range of options to structure the business for risk management and tax consequences. You know, what's funny is, I'll just share this real quick. Recent experience was the question that was given was, or the statement or the motive was, I need to save on taxes. And I'm going to save on taxes by purchasing X because I don't want to pay a lot in taxes. And I want to be able to pay for other services and other reports that's going to help me decide if I should actually, or how I'm going to reduce those taxes. And I want you to tell me how to do that. Oh, and wait. Then I'm going to turn it around and turn it into a viable business to make revenue. But I still don't want to pay a lot in taxes. That was kind of riddled out, right? Not a lot there. But if you pull out some of the bullet points, you understand where I'm going with this. It's important for planning. It's important for having, we're in the age of technology. There's no reason why. I mean, there's our reasons and excuses, but take advantage of your financial professional, your CPA accountant. Find out what they have to offer. Have a discussion, schedule a consultation, and really dig in. But write down what you want to see happen in 5 to 10 years, or 15 to 20 years, or whatever. If you're planning on growing your family, and or plan on getting married, or you're in business for yourself, or you have a partner, or you want to buy a business, or I don't know. Write those things down. Have a vision planning document for yourself, right? And then bring it to the table. It doesn't all have to be answered at one time, but start a flow. It's going to help. Is your client an S corporation shareholder with the ownership of more than 2% of the company's stock? Consider the corporation reimbursing shareholders Medicare premiums. Man, that's a mouthful right there. Schedule D. Does the client have capital gains and losses reported on Schedule D? I'm going to jump over here, right? Schedule E. Is there income flowing through from an LLC, S Corp, or partnership to a Schedule E?